is up, you guys? Welcome back to my channel. Nikki here, and in today's video I am going to be going over 3 of the best monthly dividend paying stocks for you to add to your long-term dividend investing portfolio. So y'all, let's get it. If you are new here, what is going on? My name is Nikki, and it would mean the absolute world to me if you would consider subscribing by hitting the envy in the bottom corner, or that red subscribe button down underneath the video below. Join the crew, join the journey. On this channel I post a minimum of 2 videos a week all about money, stocks, investing, finance, side hustles. I like to make money, have fun, entertain and educate along the way, and invest in something bigger than myself. So if you are into that, or if you are into hanging out with me half as much as I honestly love hanging out with every single one of you, please consider subscribing. And don't mind my lumberjack looking ass today because we have had a long day and I'm trying to get this video filmed. So y'all, in this video, ooh, your girl searched, okay? We opened some books, read some data, really went into the archives. Because if you have been a subscriber of the channel, a member of the crew for a while now, you know that a few months back, I posted a video about the 3 best monthly paying dividend stocks at that time that I thought you should buy, which I stand by wholeheartedly. So that link will be down in the description box below if you want to check that video out after this one. And another thing is, I'm not going to sit here and tell you that you should buy O Realty, Realty Income, and Stag Industrial, even though those are my top 2 hands down favorite monthly dividend payers. I wanted to get you some real saucy shit, some real off the radar type of stuff. But I have been feeling a little bit risky, okay? A little risque. Actually, no. None of that at all. But your girl is starting to kind of like educate herself on day trading and options and just the trading side of the stock market. So I'm trying to work on getting that trading account on my TD Ameritrade up and running and get some capital in there to kind of play with it. Right now it's just paper money, so I'm not losing anything. But I thought, you know what? Let's do some research. Let's dive down and find maybe a little bit more riskier, but not really, because they still pay a good dividend and I still think they're secure, but kind of off the radar, nobody talks about kind of stocks that pay you monthly to keep money in their company. Because let's be honest, if something was horrible and it did not make sense financially or stability wise for them, I would not be talking about them or recommending them at all whatsoever. Rest assured that at least I think these companies won't go bankrupt or what have you. I mean, we don't know, but I am, you know, not going to take blame if something were to happen. Don't come at me is all I'm saying. And hopefully you can appreciate that I did some due diligence to get you these kind of off-market brand deals, okay? Oh, and I'm definitely not going to tell you to buy SPHD. If you want my thoughts on that, I will link the second video down in the description box below. You can check it out, but I don't like that, okay? I don't like that one, but you do you. A ton of investors absolutely love SPHD. It's just not something for me. So I'm gonna go ahead and jump right into it. The first stock I want to talk about is not one that's like super far off the radar, like kind of off the radar, but not like that much, because I have heard some people talk about this company, actually kind of a lot, but you know, low-key, I haven't really looked at it that much. And that is going to be Main Street Capital, M-A-I-N, y'all. And actually, I'm gonna give you a bonus stock because it's your lucky day. I came across a very similar company and stock like Main Street, and that is Solar Senior Capital. Go ahead and look them up. Its payout ratio is at 95, so it is elevated. Like I said, these ones are a little bit more riskier, I guess, than your typical O Realty, Stag, stuff like that. But I think they're worth looking into because they kind of are in the same industry, in the same market as Main is. So go ahead and check them out. The ticker symbol is SUNS. So go ahead, check them out. And if you made it this far and you're still with me and you heard this part, just comment down below bonus, so I know that you're here with me and I love every single one of you. Now, back to Main Street Capital. So Main Street Capital is a BDC, a business development company, which essentially means specialize in long-term equity and debt investments in small cap to mid cap range companies. Here are some quick Here are some quick stats for Main Street Capital. 1, their dividend is at a 7.5%, which comes out to roughly about 20 cents per share every month. Their payout ratio is 98%, which is a little ouch if you ask me. Normally, I like my investments to be under 60, 80 max, but you know what? We're risky today, okay? We're feeling young and alive. 98, I don't know. You tell me, would you ever invest in anything in 98% payout ratio? I probably wouldn't, but there are some reasons why I like like every single one of these, I'm gonna let you know. So let's keep going. And last thing that's very important to us dividend investors is their dividend growth from the last 9 years is an average of 10.17% each year. And to be honest, I'm not really gonna sit here and talk too much about Main Street Capital because I know there are a ton of videos about them out there on YouTube, but I do think they are, out of all the lists of hundreds of monthly playing dividend stocks, I do think they are one of the top safest. And the main reason why they made my list today and why I actually would still look at them is because their debt to equity ratio is a 0.23%. So this number basically gives me an overall snapshot of the balance sheet and financial safety and health of the company. The debt to equity ratio is essentially the company's debt in relation to the overall value of the stock. So yes, they do have a 98% payout ratio, but when you let me know that the debt to equity is a 0.23, I think they're showing enough signs of financial stability that I don't really worry about the payout ratio getting out of hand or them not being able to make a payment. For that reason, that is why Main Street Capital is definitely on my list, and you may want to check it out, but let's move right along to number 2. Alright guys, so the next one I want to talk about is actually a Canadian-based telecommunications giant, and that is going to be Shaw Communications. Their dividend is at a 4.8%, around between 7 to 8 cents per share per month. Their payout ratio is actually lower at 82%, so almost under that 80 I would really look at. And the only issue here is their dividend growth hasn't been fantastic. They've been extremely consistent, but even though it's not growing, it has been extremely consistent with having a payout of some sorts. It's not horrible. Really what happened was there was a big dip in April, kind of during the beginning of this whole pandemic, and then since then has pretty much recovered back up to its normal rates per month. So I don't know, I wouldn't say it's really anything to be too concerned about. I really like Shaw Communications, to be honest with you, probably a little bit more than I like Main Street. And it really boils down to the first reason being because in 2016 they merged with Win Mobile, which brought them wireless business. So prior to that, they were really dominating the wireline, I guess is what they call that. But ever since that merger, they now have wireless, they have the Wi-Fi. They're kind of like what I think of Spectrum Mobile in the USA is pretty much how I see Shaw Communications in Canada. So I think because of that, there is actually a very good upside potential for this company. The second reason why I really like them is because they have 130 billion with a B dollars on their balance sheet. We like that. I love a company that has a shit ton of cash, extremely quick liquidity, and it just goes to show that they have an emergency fund that is so important, as we know, to really keep up and not panic in hard times, kind of like what we have going on right now. They are currently trading at the $19 mark, and with a lot of analyst data and projections for this company, some say around between 24 to 31 could be a potential upside for them. So I think if you got in around the $19, could be pretty good growth gains for you and overall returns, maybe if you want to jump in on it, but pretty much that monthly dividend is just juicy. Moving on to stock numero 3, I'm going to be talking about Gladstone Commercial Capital, ticker symbol GOOD. It is a REIT or real estate investment trust that is focused on acquiring, owning, operating net lease industrial and office buildings throughout the US. They have a dividend of 8.08%, a payout ratio kind of high at the 95%, and the growth is been there, but it's mostly known for its consistent ass dividends, about 12.5 cents per share a month. I mean, it has been doing this since 2003, so about 17 years of just consistent, reliable income in your pocket. Now, I really actually like this stock a lot because of a couple of reasons. So the first reason is what I just literally mentioned, how it's been consistently paying that dividend since 2003 at that 12.5 cents. Like, that's solid. I also saw on Yahoo Finance on August 13th, they recommended you buy it. So I don't know, it might be worth looking into. So their portfolio of properties are 122 different properties in the industrial, which you already know I love, the medical, ding, 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 I mean, what's going on right now, and office spaces throughout 28 different states in the country. So that's the second reason why I love them, is because they are diversified with their tenant base. And the third reason why I like them is because of their occupancy rate. Currently, it's at a 95.5% occupied, and since 2003, it has never fallen below 95. So they've been holding steady with tenants remaining in their properties and paying rents since 2003. And their earnings are rising. So in quarter 1, they reported earnings of 40 cents. Quarter 2 is 41 cents. So Corona really didn't affect this REIT. And when a company can outstand the Rona, then the macarona, then I can kind of get behind it. And with that consistency and reliability, I think it might be worth looking into, maybe for you to add into your dividend portfolio. I don't know, what do you guys think? Do you like my choices? Did I give you some good special sauce right there? Did you like the taste of all that shit? To be honest with you, Main Street Capital, like I said, has been talked about before, but the other two, I hadn't really heard it, you know? Actually, I kind of low-key take that back because I've heard about Shaw before, but I mean, like, not in, like, you know, great detail or anything like that. But like I said, you guys, my favorites ever, literally monthly payers that I could literally just buy these two and keep putting money in them and I'd be fine, would be Realty Income or Stag Industrial. So outside of that, these three kind of grabbed my attention. Let me know down below if you own any of these, if you agree, if you disagree with me. Also, if you wouldn't mind, is to be so kind as to smash the damn thumbs up button for the YouTube algorithm. Help your girl make her dream a reality. And honestly, I just greatly appreciate it if you do that. It brings a smile to my face. And if you're this far and you are not subscribed, please subscribe to the crew. We would love to have you. And if you are hearing my voice right now, you are the real MVP. You gonna get some kisses. Come here, you know I love you. And like always, you guys, enjoy the journey, whatever your journey is. And always remember to do what sets your hearts on fire. And I will catch you all, I better catch y'all in my next video. Bye, guys.